are complex, analysis is cheap, insight is rare. You know what mark to market means. It's when you stop pretending an asset's worth what you paid for it and write it down to what it's actually worth. It's painful, it's honest, and most people in the mainstream finance world would rather not. Welcome to Trading the Absurd. I'm Sterling Stoudenmeyer, a finance and technology guy who's run companies through Chapter 11 reorganizations, done cannabis operations, residential construction, and numerous other industries. With me is Greg Cooper, a chartered financial analyst who has seen more default curves than he cares to count. Between us, we've got decades across capital markets, structured finance operations, and a healthy obsession with markets most people have never heard of.
We talk instruments, macro, trends, and the occasional genuinely bewildering thing that somehow trades at par. We're here to find the edges, the anomalies, and the outright weirdness that the mainstream finance world either ignores or hasn't found yet. We break down mispriced narratives, challenge consensus thinking, and try to find the risk hiding in plain sight, because in today's markets, the biggest edge often comes from recognizing just how absurd things have become. This is another look at the numbers behind the noise, trading the absurd. Let's get into it.
Hey, so today we're going to talk about an interesting blip, if you will, in the world of cannabis companies. Specifically, we're talking about the decision by the Trump administration's DEA to reschedule medical cannabis from Schedule 1 down to Schedule 3. This seems like it'd be kind of a non-event in terms of the world of finance, but it's actually a huge event for financial impact on anybody who's in the cannabis industry. So backing up a little bit, back in 2016, 17, 18, at the heady early days of the cannabis world, everybody was very excited about cannabis companies and how they were going to all make all this money and, trying to figure out how to get their hands on the stock of these cannabis companies. I was running a cannabis company in Colorado from 2014 through 2020. And I remember everybody I knew banging on my door, asking me how they could invest. And most of them, I told them the same story, which is, I'm not sure you really want to do that, because the reality is that right now, this is actually a business that's taxed into non-profitability. It's taxed into losses. We'll talk about that in a second, under something called IRC, Internal Revenue Court Ruling 280E. And it's also a competitive business, but people just kind of assume that everybody in this industry was printing money, and the reality was quite different, especially in states that have unlimited licensing, like the state of Colorado. To put it in perspective, recently I checked, there were 950 licensed cultivations in the state of Colorado, which is an awful lot. So it's a commodity product at the end of the day, and it's a market that's very tough to make money in, but that was made impossible under 280E. So let me just kind of explain to you what 280E was, because this will affect a lot of things going forward. 280E was effectively a ruling by the IRC that the IRS adopted that applied to anybody who dealt illegally in trafficking of drugs. And because cannabis is considered Schedule 1, it was considered a drug that was being a narcotic, that was being trafficked illegally, despite the fact that the states had legalization. And it was an interesting dichotomy that to some extent still exists. In the beginning of the industry, the federal government said this is illegal. And if you trip the Interstate Commerce Clause by working across multiple states as a cannabis company, in other words, if you carry cannabis products across state lines, you trip the Interstate Commerce Clause, and that will activate federal enforcement, meaning you go to jail. But the reality is that even not trafficking across state lines, you were technically still illegal. And there was some cover provided by something called the under FinCEN, which is the Financial Crimes Enforcement Network, that basically the Cole memo in the early days laid out enforcement priorities. And those enforcement priorities said that if somebody was in a state where, cannabis was legal per a state regime of some sort, and that organization was licensed and was not doing business across state lines, and also didn't do a few other things like traffic weapons or, traffic individuals like minors and children, things like that, pretty obvious things, that they would leave them alone. And they generally did. The reality is that, as the officer of a company that was a licensee, I lived under the sword of Damocles every day, specifically the U.S. attorney. And if the U.S. attorney in the state of Colorado, for that district appointed by the attorney general, decided to come and arrest me for violation of federal crimes, technically they could. Interestingly, they never really did. They did do a few things to some organizations who were, in violation of things that were in the FinCEN memo. But if you didn't violate the things in the Cole memo and generally, were a clean operation, they were going to leave you alone. That did not change, though, the IRS's view of this, which was that this is still an illegal activity. And so under 280E, the basic rule was that you could only deduct one thing, and that was your cost of goods sold. You were not able to deduct anything else. And that basically made it incredibly difficult to make money. So I've got a little example here I'll bring up and show you. Greg, I don't know if you have any thoughts to add to that in terms of some of the companies I know you've been looking at.
That's a tremendous amount of detail and quite a bit that I didn't know. So I've already learned a lot here. We'll get to the charts in a minute, but from a fundamental perspective, the fact that, there's very little in the way of either profit, or I assume it also affects the free cash flow from operations, just because of the extreme level of taxation that, to the extent that you're a fundamentalist, it may make a lot of sense for what we see when we look at the charts. Because the charts are pretty ugly, but we'll come to that in a few minutes. So please go ahead and share.
Well, let me share with you kind of this is a fictitious example I worked up to sort of explain the difference between what we really see in a rescheduling world and a post-rescheduling world. And so I created this fictitious company with the top line of about 10 million, cost of goods sold of about 45%. That's not atypical for the industry. You see anything from 40 to maybe 50% for decent operators. For publicly held companies, typically it's a little less. And you got a gross profit line here of about 5.5 million on that 10 million of revenue. If you look at the sort of below the gross expenses, I put D&A in at 10%, interest at 10%, SG&A at 25%. Not unreasonable numbers, of course, depending on the capital structure, what the interest and those components are. So you had, a tax computation here was pretty much just take revenue less cost of goods sold. There's your taxable income. So the gross profit line here becomes the taxable income. And that is a pretty large expense when you consider it. Your effective tax rate ends up being 11.6% in this example of your gross revenue, not of your net income, of your revenue. And it wasn't uncommon to have a business where you made a profit from a financial standpoint, particularly in EBITDA, but then you would end up with a negative number at the bottom line on net income, not because of interest, but because of taxes. And so if and then you look at this from a cash flow standpoint, if this organization had D&A of $1 million, then, but they had a net income after tax of negative $845,000 because they had to pay almost 1.2 million in income tax. And this is, by the way, just federal income tax. Doesn't count state income tax. Doesn't count state and local in general. If you look at all the other SALT taxes, I will also tell you that this industry is probably the most taxed of any on the planet. Most municipalities are taxing on all kinds of sales taxes, which of course wouldn't show up here, but they also have things like excise taxes. And so, for example, in Colorado, they had an excise tax that was 15% of the basically the sale price, and you were not allowed to pass that on to the buyer. So, that ended up being a part of your cost of goods sold. But all that notwithstanding, the reality is that you could have a profitable business that had negative cash flow. In this case, you're going to have a very, very small positive cash flow, but that's only because I'm sort of previewing a relatively well-run organization here.
Right.
If we look at that same organization in a post Schedule 3 world, same revenue, same cost of goods sold, same everything, same DNA, interest, SG&A. You get a taxable income of about $1 million, so about 10%. And your federal income tax is only on your regular taxable income. So at 21%, that'd be 210,000. So you have net income after tax of 790. So you went from an $845,000 loss and swung to a $790,000 true net income, and all because of this one change in the scheduling and what happens now. There are some other pieces and parts that go with this. The DEA has started rolling out, a registration process where anybody who is in a state regime, a state license regime, and wants to basically be treated, by the federal government as being compliant, they want you to register with the DEA. And it's an interesting conundrum because registered entities cannot do business with unregistered entities. So if you have two licensed entities in the same state, one was registered with the DEA, the other not, they could not do business with each other. The other implication is interesting in that because the structure of all this is subject to international treaties around cannabis, around narcotics and drugs in general. The DEA has to sort of run this cover scheme where they control all of the trafficking of these products. And to enforce that, they basically create a fictitious sale buyback where you sell your product to the DEA and then you buy it back from them. And the DEA charges a fee on that, an administrative fee. I think right now it's about $113 per kilo. So that's going to drive up the cost of goods sold by a factor that wasn't there, but it still would be de minimis compared to tax and gross profit. So that's kind of where these guys are now. One last component of this, and I think the reason, Greg, that the charts are looking ugly, and that you're really not seeing any impact on those charts, right? You're not seeing huge increases in valuations or anything. Is two reasons. One, you sell the news, right? So the news here was already sort of factored in. Everybody was assuming this might happen. But the other is this only applies currently to medical cannabis. Most of the publicly held companies, in fact, I can't think of any of the publicly held players, the MSOs as they're known, the multi-state operators, that are not in recreational or adult use cannabis in one or more of the states in which they operate. Now, they might be medical in one state, recreational adult use in another. They might be medical and recreational in a given state. That's a possibility too. So a good example of this is, sort of the industry leader, I think, in terms of valuation and a variety of other things would be TruLieve. TruLieve's, largest segment of their revenue comes out of the state of Florida, which technically is a medical program. So TruLieve seems to benefit hugely from this in terms of that. But, Curaleaf and Verano and Ensa and a variety of other players out there, Cresco, et cetera, those guys are a mixed breed in terms of recreational and medical. But I can tell you that in states where rec and medical is in existence, you're going to see that recreational is almost always many, many times the size of the medical market. There is an interesting other conundrum that might come out of this, depending on what happens in this meeting that's coming up. So the DEA, as part of their announcement, also said that they're scheduling a meeting for June 29th of this year. And the purpose of that meeting is to consider applying this same mechanism, if you will, and rescheduling to adult use or recreational cannabis. If that happens, then this rule would apply, in theory, to both, to basically all income for licensed cannabis companies. And that would definitely be a big lift for them. Interestingly, if it doesn't happen, it's going to be fascinating to watch, because I think what you would see is in states where you have medical and recreational, suddenly lots of things would get classified as medical in a big hurry because of the preferential tax treatment. And in Colorado, for example, after they added adult use marijuana, recreational marijuana, the medical industry, that was the only industry up to that point, sort of curtailed and disappeared and almost died. I mean, it's just pretty much gone. It exists in a few places, but it pretty much disappeared in a hurry because people didn't have to go to a doctor and pay to get a script, and they didn't have to track everything by patient, and it was just a much simpler business to operate. So it was a lot more efficient and therefore a lot more cost effective from a consumer standpoint. I can tell you from a vast experience in that industry, the buyer value from a consumer is very simple. How many dollars do I have to pay to get the most number of molecules of THC that I can possibly get? That's the buyer value at the top of the list. I don't care what they tell you. I don't care how they package it. I don't care what they say. That, quite simply, is how consumers make their decisions. They're looking for the highest number of molecules of THC they can get for the least number of dollars, almost exclusively. There are, of course, aficionados and connoisseurs and people like that, just like there is in the wine industry. But the opus ones of the wine world are a relatively small, very small percentage of total wine sales. The average price of a bottle of wine in the U.S. would probably shock you. I think it's like $12 or $14 or something like that. So same is true of cannabis. And I do think, though, that if on June 29 this doesn't get applied, and I feel like it will, but if it doesn't, then everything's suddenly going to get reclassed as medical. It's going to be an interesting switch for the industry. So right now, everybody's in this wait and see period, which is another reason this is all kind of sitting here sideways. And I think the last part of this is interesting is I wonder what's happening in the prediction markets as a result, because it makes me think that, over on Call Sheet, somebody ought to be, wagering on whether or not June 29, the DEA is going to reschedule recreational as well as medical. But I just wanted to kind of set the stage here for people to understand what the impact of this is, and what it should be on these companies. But right now, we're still in that gray zone. Nobody's really sure just how broad this impact will be. So that's a quick overview. Go through it in some detail.
Wow. Okay, I learned a bunch. This is great. This is great. Your comment towards the end about dollars per number of molecules, I mean, obviously rings very true with me, because I've always looked at this as a commodity product. I mean, this is a plant that grows wild on every continent except Antarctica until it was, made illegal in the mid 20th century. I don't know. I haven't
20th century. Yeah.
I haven't researched this in depth, but I mean, my sense is this is another case where you had the pharmaceutical industry that paid lobbyists to buy Congress critters to eliminate competition, which is something that we unfortunately continue to see all the time. Wow, we wind up talking about politics a lot, don't we?
It does have an intersection with finance on a regular basis. Yeah,
it does. It does. And I mean, as pretty libertarian in my views, so I've always felt like this stuff never should have been illegal in the first place. It's not, I mean, despite the fact that marijuana was one of the 4 food groups in the 1980s when I spent my teens and 20s, it's really not my drug of choice, or not anymore, not in a long, long time. I much prefer a nice bourbon. But anyway.
And alcohol is just as much a drug, and always has been. And, that was actually one of the key arguments for legalization is, you've got another drug out there, alcohol, that is legal. And it's also fascinating that in states where cannabis is legal, alcohol sales tend to go down. So, people are substituting the one drug for another, but, then there's probably the most pervasive drug on the planet, caffeine. Yeah. So, the reality is that, people are going to want to use this. There's a whole long discussion about, who's the consumer of this and why and how, but it is full of lots of surprises. You're expecting, mostly young kids, hippies, whatever. The reality is, it's sort of a two-tailed distribution. They've got younger adults, and then you've got older people because they've got aches and pains, and they're less worried about the stigma just because it's not an issue for them, right? So, we all get a little more comfortable in our skin as we get older, and when people retire, then they don't even have a they don't have a corporate issue of a drug test or something to worry about. So the acceptance at the higher ages is much higher. And it's fascinating to kind of see how that works. Sleep is a big issue for most people as they get older, and cannabis is great at solving that problem for them. So, the industry itself is a real industry, and it didn't start out that way, but it has become much more of a real industry. And the big players in this space are, doing exactly what you would expect. I mean, they're turning this into a process manufacturing industry that can make this product consistently and reliably and predictably in terms of what it's going to cost and what the effects will be. One of the big things in this scheduling order too, the whole idea is to make cannabis research available. So universities can now support the research, which is an interesting problem because in my time in this industry, we've never had the ability to get any kind of university support for research because it's illegal for them to possess the product to do the research. And that's led to some real absurd things. But the reality is that the industry will be a lot stronger, I think, as a result of having that research capability behind it. And I think the last thing to point out is in the early days of the industry, everybody was convinced that those of us who are starting out companies and doing this were going to, quote, sell out to big pharma, end quote. I would say that's very unlikely. And it could happen, but I think it's unlikely. It's a different world for them than the pharma players are used to. If they did do this, they would probably do it as like a separate business that they own, and that they could get rid of if they wanted to. I just don't think that they're going to play in this space, at least not for quite some time. I do think alcohol companies, on the other hand, might have a big interest. In Constellation Brands got burned badly when they tried to do this back in the early days with Canopy, a big player in Canada. This also, of course, has no effect on the Canadian companies. So the last thing to keep in mind, too, is that those companies that are U.S. based, Trulieve, Curaleaf, whatever, you can buy their stock today, but their stock is not on the U.S. stock exchanges. You're typically on the Canadian exchange, and you're buying a tracking stock or something like that. So right. This will also change that. This would allow them to list on a U.S. exchange. But I think as long as they have the recreational aspect, until we get past June 29, nobody's even going to talk about it.
Yeah. So that's really interesting. So we're coming up on a date of importance here, and it'll be interesting to see what happens. And if you want to play this, I guess there's a couple of different ways. But let's take a look first at. Let's bounce back and forth between Kalshi and Polymark and see what they're telling us. So give me a second. And can you see it?
I see it.
Okay.
I assume our audience can see it as well.
Yes. I don't know why. I'm showing up under politics, Trump, which surprises me. But
that is interesting. When did this Kalshi go live?
Let's take a look. Let's see, will it tell me? It says June 13th, so it must be.
Well, but look at that. It's before January 20th, 2029. So, and it's interesting too, this doesn't break it down to medical versus recreational because nobody really thought about that.
Right.
But, so this is another one of those polymarket issues, if you will, like, okay, well, did it or didn't it? If you're talking to somebody like me who's pretty close to it, my answer is yes and no.
Okay, so like we talked about last time, well, let's go to the full rules because this is where this stuff matters. In
the payout criterion there, the payout criteria for the contract encompasses the expiration values that after issuance and before whatever the date is, marijuana, cannabis, as defined in Controlled Substances Act, is removed from Schedule 1 and placed on a lower schedule. And then if the DEA were to reschedule only certain cannabis derivatives or specific cannabinoids without reclassifying as a whole, that would not qualify. So the real trick here, though, is that nowhere in here do they say medical versus recreational, right? So
this is
simple reality is this is undefined. I mean, you could argue, yes, it's been rescheduled. Then you could argue, no, not all of it's been rescheduled.
Yeah, no, I would based on what I'm reading, based on this line, I would say that, it's a no because would not. Here we are. If the DEA were to reschedule only certain derivatives or specific cannabinoids or a particular cannabis-derived pharmaceutical to a different schedule without reclassifying marijuana cannabis as a whole, which has not happened, this would not qualify as rescheduling marijuana for the contract. So this, to me, looks like all or nothing. And because it was not all, then this is not triggered yet. It's not happened yet. I mean, we'll have to see what happens in June, and right now the odds
What's
are.
the what is that blue line there that just like skyrockets? Was that just something they added later on?
uh that's probably when before 2028. Yeah,
Yeah.
that's
Okay.
probably when they started that contract
Right.
for
Okay.
2028. First day 12/13/25 is like, or 12/12/25 is the first day of the contract, is what it looks like, unless there's something I'm missing. And let's see, before 2027, 6/13/25. So that was like June of last year. So this other stuff came in, these other two.
But this is still live, right?
Yeah, yeah, this is live.
So that
This
means
is
that
live.
they haven't concluded that it's yes or no.
Correct.
Interesting.
Yeah, well, they're
Um,
saying it's not happened yet. And the odds of it happening in 2027, I mean, if we assume that the math here is correct and these prices can be translated into probabilities, then the market is saying that there's only a 38% chance that it's going to happen before the end of 27. Wow. Okay. Not even this
yeah,
year.
I think I would buy
27.
that one at a yes because I think that I think it's highly likely that come June 29, the DEA is going to reschedule. It might not happen on June 29 because that's just the meeting, right? That's the hearing.
Right.
But I mean, it's still in 2026. I think it's highly likely that they will. I would tell you the insiders in the industry are probably, at least the ones I've talked to, are, I'd say it's better than 50% chance that they think that it will happen.
Okay.
So that's better than 38, right? So I
Right.
mean, because just structurally, there's going to be a whole bunch of complexities in here for operators who are both medical and recreational. And I think also the DEA probably recognizes what I was talking about before, that suddenly everything recreational will just get reclassed as medical, and it effectively will be anyway. I mean, Florida's a great example. I always jokingly call Florida's medical cannabis a fig leaf of medical. It is medical only in the sense that you have to go get a card.
Yeah.
But if you go talk to people who work in dispensaries there, they will tell you the 16,000 ways to Sunday they can game the THC limits for that patient so that person can get the maximum amount of THC. And this is not driven by what's their health. It's driven by how do they get the maximum amount of THC, and because there's a limit on their card to how much they can have. Um, I would also tell you that the per caps of consumption in the state of Florida are off the charts. And that tells me that what's likely happening is that people who have a card are buying it for friends and family.
No.
And so what
Yeah.
you're really seeing is a kind of a quasi shadow recreational market there. So I don't know if it's just moral, preening that causes Florida to say it's medical, or that they just want better regulatory control. But the simple reality is it's a medical market. It's a recreational market masquerading as medical, in my view. And so, the only thing that really they have succeeded in doing is making sure that the only people who can buy it are people who live in Florida and are willing to go to a doctor and pay. That's about it.
Yeah, well, you can. I mean, there are other THC products. I mean, gummies are available all over the place, and I know that there's some distinction as to whether this is like natural THC or synthetic. And
Correct.
I mean, a friend recently had a bad experience with a synthetic gummy.
And they have been, for example, the state of Alabama last year outlawed all cannabinoids coming out of hemp that exceed a certain THC percentage and or anything that's synthetically derived. Because the reality is that what was going on in the hemp industry was they were creating products that had THC in them, typically by doing synthetic derivations, or just by outright lying and taking, regular cannabis. I mean, cannabis and hemp are the same plant. The difference
Right.
is how much THC is in it. And
Right.
so, they were selling products. I mean, you could go into a gas station anywhere in the state of Alabama and you could, buy a product that, in other states would have been highly regulated as recreational cannabis. Because it was masquerading under the name of hemp and CBD, even though it had THC in it. So I think that that's going to go away. The lobby for the industry has been fighting hard against it in states like Colorado and Alabama and others. They've already outlawed those. I think you're going to continue to see that and probably see that on the federal level. To some extent, it's already kind of happened with changes to the Farm Bill. But anyway, not to go down that rabbit hole.
Okay.
The reality is, I think that, yeah, it's likely it's going to be rescheduled. Keep your eye on June 29.
Let's jump real quick to Polymarket, and here you've got this weed rescheduled by.
That's funny.
Yeah, well, March 31, I guess, is passed.
But look at the date, June 30, right? So
June 30, yeah.
Yeah, I would buy that all day long.
Wow.
Because I'm looking at that thinking, I mean, first of all, will it be by June 30? Well, the hearing's on June 29th, so it doesn't mean it's going to be done on June 30, but it might happen.
Right.
I mean, what happened here in terms of the, rescheduling, in terms of the medical, nobody was really expecting. I mean, the DEA literally just woke up one morning and signed it and said, okay, we're doing it. I mean, there was not like a big meeting or hearing. They had put out the intent to do it sometime before during the Biden administration. They'd asked for public comment on it. They'd gotten like 40,000 comments or something, but then nothing happened. And then the day before, the rumor mill started that the secretary, I guess it is, of the DEA was going to sign this. And then the next day, sure enough, it got signed. And actually, I think it got signed the night before. That's an interesting question too. But December 31st, I'd say, odds there are pretty good. If you go back over to Kalshi for a second.
Yeah.
So the yes over here is, that's priced the same, huh? 38. Okay. I was just curious if it was priced differently.
Before 2020. So 38 through the end of 27, and this is June 30th, 28. So, 34. Okay. 34 cents.
Yeah, I understand why the probability is at 28 and the price is 34.9, but okay.
Well, you got the VIG, I guess. Yeah, I know, because it doesn't sum to 100.
Yeah.
So, I mean, this may be, I don't remember the details of how the fees work on Polymarket, but
but Kalshi sure sounds like a better place to do this trade.
Yeah, look at that. Look at that.
I mean, because you got till the end of the year.
You got to the end of 27.
Yep. Well, I mean, you're doing both of those, but you're getting a lot more. The reality is it's a 38% probability there. Here it's a 28% probability. I don't know. Maybe you buy the yes here at 34.9 and hedge your position or something. I don't know. But
potentially. Yeah.
But what's the payout there? That's a very interesting thing to look at. Pretty much the exact same trade on two different markets with different costs and different payouts, right? And interestingly, they're showing different probabilities, right? 28% here, even though buying the yes is priced the same as the probability is showing on Kalshi.
Right.
Right? Close. Kalshi's 38.
Yeah, 38.
And Polymarket's at 35 cents.
It's 28 versus
probability says 20.
Call it 35 cents.
So if I buy this at 35 cents here, I get paid 79. If I win it?
No, I think it'd be like 65.1 because I think the difference between the two is
it's the VIG.
Is the VIG.
And then if I go back to Kalshi, then it's the same payout, right? 65? 64.
Yeah, so 64, close enough. Yeah.
Yeah. Interesting.
But this, I mean, this is before the end of next year. And is this, let me just look at this. There's a way to see. This is the end, well, okay, this is the end of June this year, 2026. Let's go back.
Yeah, they're both the end of this year, aren't they?
No, 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 they're not. This is December 31, 26.
Yeah.
Okay. But this is, I mean, this
Oh, it's
is before
27.
2027. I mean, that's my
Yeah.
point. Yeah.
It's definitely a better trade.
Yeah, 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 yeah.
Yeah.
Okay. Oh, and this is also saying clarification has to be legally removed. The announcement alone does not cut it.
Yeah. It's already in the Federal Register, at least for the medical stuff. But um, it even said that being in the Federal Register doesn't cut it. It has to.
Oh, whoops. Come on, stop. Yeah, yeah. So that's fascinating. Let's why don't we go look at charts for a minute, shall we?
Yep.
All right. So let me stop share that and let me. I'm going to pull up Thinkorswim and I'm going to share that, and we'll pull up Optima a little bit later. But anyway, based on the list that we found of cannabis, cannabis companies, I loaded everything that I could into each of these platforms, and you've got okay. So what we've got, this is like one, daily bars over the course of the last year, and kind of going the ones that have shown the biggest movement. I mean, they're all very similar in that you get a spike and then it goes flat and then a recent spike. This is, what is this one? RYM. Okay. High Tide. Okay, that was Rhythm Inc. Here's High Tide again. This is like 9/17. What date was that? 9/18/25. So September of last year, you had jump.
Take a look at Trulieve. Just see if they're on there. Jushi
Yeah.
is a good one. I'm trying to stick to the U.S. ones.
Okay.
Ascend, like Tilray and Aurora are both Canadian. Um,
Okay. Trulieve.
Pure
Hold
Leaf
on.
is U.S. mostly. Forefront's U.S. But yeah, Trulieve would probably be I would say they're probably the
Sorry.
bellwether.
Trulieve. What's the
TCNNF is the ticker for the U.S.
TC
NNF. Yeah.
Trulieve cannabis? Okay. There we are. Yep. Well, I mean, you have had a jump here, and this is, I mean, it's fairly cheap stock at $9, a little
Yeah.
less than 10. Um,
But
yeah.
now go look at like 2 weeks ago. Let's see, where's your dates on here?
What is it?
Go
Tell
back.
That's 330,
Yeah,
422.
yeah. There you go. There's your
Here's your big
effect.
bar. Your big bar is at
Yep.
422.
Yep.
And what's interesting is, I mean, well, this is consistent. We've had this kind of short trend up, short-term uptrend from, I guess, a low back here of, what does that say, March 30th. So that's run up pretty good. And you can see that RSI bounced off bear market support, almost like a V bottom, and started heading up, which is really interesting, because it has been, kind of bear. I mean, you've had a few times it spiked above, um, bull market resistance, a couple of touches here and here, but it's not been a lot. For the most part, it's been more in bear territory, including, hitting the bottoms down here. Across the bottom is, this indicator that I created. It's basically your, 63-day slope of a linear regression times the R squared, and the same thing for a 21-day. And when you get the cross, it's you're not picking the bottom, but you are definitely, it's the point at which your short-term momentum is exceeding your monthly momentum is exceeding your quarterly momentum. And while I haven't done a legitimate back test yet, just kind of eyeballing it on a bunch of charts, that's been a pretty decent indicator if you've got a decent run up coming. So that's
Well, and the announcement was on April 23rd, right? So
okay.
um,
So your
I'm sure the
bottom.
industry would prefer it to have been on April 20th, but it came on April 23rd. And
Yeah,
so that's when you see, and like I said, the night before, the rumor mill was circulating. So
I bet.
everybody was kind of assuming that it was going to happen.
All right, 20. That was 420, right? Well, it ran up on 420. How funny.
Yeah.
21, 22, 23, 24. 24 is that second, well, the bar that I'm on right now. So it ripped pretty good there. That's interesting.
Yeah.
That
And
is
again, that's because they've got, a big chunk in Florida,
okay.
right?
Yep.
Which basically, that has a lot to do with it, I think.
Okay. Wow. Interesting. Well, you could always let's take a quick look just because I'm curious. Is this optionable? Yes, there are options on it. Look at that. Look at that. Well, you could always, I mean, this is a fairly inexpensive stock. It wouldn't be hard to, buy a little bit of it and put, basically assume that I mean, it's kind of a long shot, I guess, but if recreational gets approved at the end of June, as you're talking about, I mean, it's probably going to rip. And
Yeah.
this is actually one of the better charts, to be honest with you. A lot of them are really ugly. So intriguing, definitely intriguing. So
Well, and I think that, the June 29 event will have a bigger impact. So, I mean, if you're an investor and you're looking at this sector and you're thinking, okay, this is a sector where I want to play, what I think your first thing you should be doing is analyzing these guys to figure out how much of their business is medical versus how much of it is, adult use or recreational, because
right,
that's going to give you, kind of the initial view that, okay, like if you look at Trulieve, a good chunk of their business is medical because they're so dominant in Florida, and Florida is their main market. It's also their home. Um, and so, you think that, they're already seeing that effect because they have bigger exposure, if you will, to medical. But I would definitely try to get that breakdown. It's kind of a hard thing to get because I don't think these guys really publish that necessarily in their K's and Q's. But getting to that number would be a good start to understand, what states they operate in and whether or not they're medical or recreational. And then, then we get back to Kalshi and Polymarket on, well, what are your thoughts on June 29? And when does that all go into effect? One interesting thing was for the event that happened on April 23rd, the DEA set a window for people to do their registration. And they basically said anybody who is currently licensed or is licensed over the course of the next 60 days is automatically accepted. All you have to do is send in the form, and do the registration. So, which is unclear on, what the process is going to be for people who are licensed after that 60-day window. But, this is kind of a no-brainer for these guys to go do. The other thing I would probably be tracking is whether or not, people are registering with the DEA. I think there's still a little bit of debate on whether or not that's a good idea or a bad idea because,
yeah,
my joke in this industry was always the same. And people always like, well, if we could ever just get federal legalization, then we could keep all our money and not pay all these ridiculous taxes. And my response to that's always been the same. That's true, except that now we're going to have a fist fight in the parking lot of all the alphabet soup of agencies that want to regulate us. We're going to have the DEA, the EPA, the FDA, probably the FCC, just in terms of what we can advertise on TV,
Right.
and the IRS, of course. We're going to have everybody on the planet trying to everybody in the U.S. government planet attempting to regulate us, and undoubtedly, um, in the early years, there will be huge discrepancies in the various regulatory agencies' promulgated regs, where to comply with agency A, I must violate the rules of agency B. This is not uncommon. So,
ridiculous. If
yeah,
it is truly a fist fight, you root in the parking lot. You root for a tie with lots of injuries. Correct?
yeah. Well, basically, you're replacing overtaxation with overregulation. It's really
Yeah.
what it comes down to, right? It's just a different form of taxation. But
Right.
ideally, it
It's
should be, less of a negative impact on the bottom line. These guys should be able to keep some of the money they get. And one of the fascinating things about this industry is you go look at their balance sheets.
yeah.
Go look at their unpaid federal tax liabilities, uh, and you'll find that almost all of them are going to carry a pretty decent unpaid federal tax liability, and there's a good reason for that. The rescheduling also means that this industry will not be seen by the OCC and by the banking industry as a super high risk, illegal industry.
Right.
And for a long time, there was no banking in the industry. There's still some, but it's very expensive to get. And traditional lending was just completely out of the question. So, the only lending they could do was if they could issue, debt instruments on foreign exchanges, or debt or equity instruments on foreign exchanges, and that's only for the publicly held guys, or the hard money lending kind of thing, which is very expensive. What the industry kind of worked out over time is that the best lender to the industry is the U.S. government, because the penalties and interest on unpaid tax liability is less than what they were paying for other sources of debt. So just keep your tax bill deferred for as long as possible.
That is that is hysterical.
That's how
That is
ridiculous the situation has been, right? So,
yeah.
um,
Yeah.
I
That's
think the DEA recognizes that, and they're trying to fix this. But it's a good thing for the industry. There's no question in my mind. It's a good thing for the industry, and I think that these guys are probably going to be considered undervalued in very short order if June 29 happens the way we expect.
all right. Well, let's. Okay, I've got a question for you. So, there are a number of companies out there that are kind of your pick and shovel companies. So, like the REITs that own the grow facilities and whatnot. Are you, since you've been an insider to this industry, do you think that the pick and shovel guys are a better trade, or do you think the operators are the better trade, or should you mix it up a little bit?
3 to 5 years ago, I would have said the pick and shovel vendors for sure,
Okay.
because they weren't considered illegal. They weren't subject to that, tax regimen. More importantly, there was, to borrow the phrase from the Fed chair, there was a rational exuberance. And so, there were people throwing money at publicly held cannabis companies. They were throwing money at, in-state operators to get licenses and get dots on the map, and everybody was building a lot of excess capacity. And so the pickaxe and shovel vendors were killing it because they were selling lights and irrigation equipment, things like that,
Right.
greenhouses. That has slowed down substantially. I would say the industry is probably over capacity for the U.S. And Canada went through the same thing. Canada overbuilt capacity massively, mostly on the assumption that they would have a huge export business, because they were under the treaties and they could export to the European Union. That hasn't really happened. I mean, some of them have done some exports, but it's a relatively small percentage. And mostly they ended up shuttering a lot of that space. There is a
Huh.
lot of empty, unused cultivation space in the industry in most states. Not all, but most states. And so
Interesting. I mean,
I would say these days, yeah, the actual players are the play. And it's interesting too, because the publicly held guys, the MSOs, were rolling up states as fast as possible because they were convinced that their valuation was somewhat a function of how many states in which they operated. So they were trying to get
okay.
a dot on the map in every state. And then they began to realize that some of those states just were not profitable. Colorado, Massachusetts, places where there was unlimited licensing and recreational in particular, you saw a race for the bottom on pricing. Put that in
Yeah.
perspective for you. In 2014-15, a wholesale pound of cannabis, recreational cannabis in Colorado was somewhere around $3,000, depending on quality. There's a range there. Um,
Okay.
that number dropped all the way to like $800. And then capacity sort of shrunk, and then COVID hit, and demand actually increased. And so we saw that price come back up $1,200, $1,300, somewhere in there. And subsequently, it has collapsed again. It's now probably $600, $700. So it's a commodity, right? And the
Right.
more of it there
Right.
is, the less the price of it, and it's just that simple. So there's a lot of excess capacity that's already sitting on the sidelines. It's probably going to stay there, um, unless adoption from consumers goes up dramatically.
I mean, I guess with the muddy regulatory environment, I mean, I've always thought it would be interesting, like if cannabis ever got, licensed or ever got legalized, does this get added to, the futures markets in terms of a cannabis future for, whatever, delivery in June, so many
It
kilos.
could, it should. Yeah, I mean, it is a commodity. I think
Yeah.
that's exactly where it'll go. And by the way, those kinds of things were not uncommon in some of the states, just between individual operators.
Okay.
Where not unlike like Starbucks, right, doing contracts so that they could hedge the cost of coffee, with
Yeah.
South American players. Same kind of
Yeah.
thing. And you saw that happen with big retailers, doing hedge kind of orders with suppliers. And so, yeah, I think absolutely you could see this on the CBOE one day. That'd be kind of interesting, wouldn't it?
Yeah, it would be. I mean, not that anybody wants more alphabet soup industries in your business, but that is something that the CFTC should, uh, maybe consider. I mean, particularly if they wanted to. I mean, I guess at this point it would still have to be state specific for delivery within a specific state, but I'm sure there'd be plenty of retail money on the, or even institutional and retail money on the sidelines willing to, get into it.
Yeah, I think you're going to absolutely see institutional money get in. To this point, it's mostly been private equity and private debt, and so
So
I do think that you'll see that.
Give me another name to look at here, because I mean, or we could flip through and
Look at Curaleaf, maybe.
okay, Pure Leaf,
Green Thumb Industries, Verano, variety of players out there that you can go play
Green
with.
Leaf. You said Verano.
Verano, yeah,
Okay, Verano's not giving me anything, even though Schwab recognizes
yeah,
it
it's
in there. What
pretty
did you
small
say?
market cap.
Okay,
Forefront, Jushi, Cresco. Well, Cresco's complicated.
Juicy. Here's Juicy.
Yeah, and you can see
So
they got that same spike back in
what is this? What is the
April
date?
23rd. Yeah,
Okay. Yeah, there you are. So they had the spike, but they traded right back down.
yeah,
I mean, you hire, and this is like less than $1, so this is like penny stock territory here.
yeah. Most of
So
these guys have very low valuations right now, and the
yeah,
reason is historically their earnings have been horrible because their tax liabilities are off the charts.
yeah. Well, your momentum, and I mean RSI is like middle of the road doing nothing, and I don't know. I mean, it's that to me looks like a lottery ticket. You betting on June 29th, I guess. I don't see anything else exciting with that. And I can tell
But
you,
it's interesting how quickly they reverted back to the mean, right?
yeah. Oh, yeah.
So I think that tells us that, yeah, I mean, as people began to understand what that announcement meant, I think it got factored back into the pricing.
Very
Um,
quickly.
and I don't know Jushi's recreational versus medical breakdown, but I'm going to bet that it's probably a lot more recreational than medical. Look at Curaleaf there; that was an interesting one too.
Curaleaf.
Yeah, Curaleaf's a fascinating one. Yeah, see, Curaleaf has sort of sustained an uptrend here.
Yeah.
Um,
I mean, yeah, you're up here, you're above, your moving averages. Although a lot of
yeah,
this recent, I mean, you had the big spike on the day, but then volume has traded off. So this
yeah,
this uptrend, that typically indicates this is not a real strong uptrend. You don't have a whole lot of conviction in it.
Right.
Although RSI, I mean, remains, you know, price is in accord with RSI. It's like when they diverge, you've got like price going up and RSI going down. That's typically a sign of a
What's their
reversal.
PE right now?
God, I don't know.
Trying to find it on Thinkers. So here, I don't know where it is.
URLF. Let's go. Come on, financials, fundamentals.
Yeah, the us value guys, we're always looking at things like
Yeah, you guys look at weird things.
we
Well,
do, yeah, like
and let's
actual earnings. Um,
yeah. Hey, come on. We both worked in operating companies before. There's a lot of I don't know. Management's got a lot of discretion when it comes to what makes it to the bottom line. That's
that's
why I'm
true.
a that's why I'm a cash flow from operations guy. It's like that's a lot harder to play with than your net
Right.
income.
I mean, even that can be gamed, no
Right.
question. So,
That's
um,
why that's why I'm a charts guy. I mean, price and volume are real. Anyway,
yeah.
let's see. So you got
Um, so right
mornings.
now, their book value is 98 cents a share. Their cash flow is 2 cents a share.
Okay.
Free cash flow is 10 cents a share. So,
Right.
um, pretty small. And their earnings is negative. Not surprised there.
Yeah. 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 Net profit margin is negative
And it's interesting
18.2.
because like Thinkorswim and those guys would never have thought to, you know, analyze this on an EBITDA basis because, or
Right.
really, um, an EBIT basis, which is really how you should be analyzing them, is on an EBIT basis, because that's going to change, I think.
Yeah. Yeah.
You know, and in the early days, their valuations, especially for their IPOs and stuff, was all based on EBITDA, or adjusted EBITDA, and there was an awful lot of craziness in there. There still is, and I think that's one of the challenges if you're a value investor here, is trying to get through all of the clutter and all of the uniqueness of the industry, in terms of tax and things like that, regulatory impacts, to really understand it. But it's true of every sector, but in this sector, I think it's especially so, just because it's very weird. It's not normal stuff.
Yeah.
But yeah, I mean,
Well,
return on equity is negative 22. I would think most people would say run. But yeah, the stock has gone up and is holding. And, Curaleaf operates in a variety of countries too. They're not just in the US. So,
oh yeah.
um,
So it says, look at that.
yeah.
Yep. Yep. Based in Stamford, Connecticut. Okay.
And I'm
Um,
wondering, a lot of people are probably also thinking that this would open up, especially the DEA registration opens up export. I wouldn't bet on export for any US based player.
yeah.
We don't have the cost advantage of a commodity market. I mean,
No. No. Definitely not. Definitely not.
if you want to bet on somebody for that, you should be betting on somebody in Mexico or Colombia or
Sure. I mean, the people that have
Republic.
done it illegally for decades. So,
Yeah, well, but I mean, you can't invest in them.
all
Um,
right.
but I'm just saying that like Canada can export and they do export, but it hasn't been big. And a good reason for that within the European Union, um, Spain can produce and deliver much cheaper than Canada.
Yeah, well, you've got a better climate. I mean, I'd say everything in Canada has got to be done indoors anyway. Or the majority of the year, it's going to have to be done indoors.
Yeah, I mean, Spain is Salinas, California times 100 size
Right.
wise and weather wise, and so most of the vegetables and fruits in the European Union come from Spain, and this is in
Okay.
the same category. So, Spain's going to be positioned to do that better than anybody in North America.
I want to do one more thing here. I mean, we've been going on for a bit, but let's take one quick look at the relative rotation graph in Optima. And I couldn't get everything in Optima that I was able to get into Thinkorswim, and I guess that's just my, whatever my data feed is here. But let's see, what were we just looking at? Cureleaf, and I don't think I was able to get it in here. But if you look at the relative rotation graph on some of this stuff, and I'm using SPY as the index on that, so that's the origin point at 0 on both sides. We'll make you go away just so we can see more here. But you got a whole lot of stuff that is underperforming from both a relative strength and a momentum basis. And that's that 20, 22, 22nd. You have a little bit of stuff up here that was actually outperforming, but not a lot. So here's one of the REITs, so Innovative Industrial Properties. Hydro Farm Holdings. So this is probably a pick and shovel guy, I'm guessing.
Yeah, Hydro Farm sells nutrients and equipment and supplies, things like that.
Right.
Hydro Farm, by the way, is also owned in some part by Scott's.
The producer of like regular gardening stuff.
Same people, yeah.
Okay, makes sense. Makes sense. There's Green Lane Holdings. They've outperformed. Let's see, INCR, Intercure. So I guess that's a medical guy. YCBD, again, this is another medical one. CGC, Canopy Growth, and RYM, Rhythm. I don't know what they do, but anyway, it's kind of a mixed bag here in terms of how this stuff has performed, on a daily basis relative to the S&P 500. Let's take a quick look at weekly and just see if it moves. What does this tell us? We got to bring it all in. Wow, different story on a weekly basis. I guess these guys, Urban Grow.
Yeah, Urban Grow is kind of a unique player. They do design work,
Okay.
and they also resell equipment, things like that. So they're kind of like architects and engineers to the industry in some respects, but
Okay.
it goes beyond what traditional architect and engineering would do.
Okay.
And they're it's interesting because there's a whole nother wrinkle to the industry of indoor versus greenhouse versus outdoor. Urban
Sure.
Grow originally started out doing mostly indoor stuff. They've expanded that considerably now to do kind of everything. But yeah, there's they basically are the player that pickaxe and shovel vendor. They're not really in the industry per se, but they're reaping the benefits of any capex that's going in the industry. And I haven't looked at. I don't know if there's an easy way to find this. Just how much capex the industry is putting out right now. I got to think it's dropped considerably.
Huh. Okay. Yeah, that's that would be a research project, not something that I can pull up at my fingertips. But
Yeah.
Interesting. Our rhythm looks like it's about to rotate into the leading quadrant, and this 22nd looks like it's 22nd Century Group's about to leave IIPR. Here's our REIT again. Everybody else is either underperforming, and you got a few people that are improving, which I'm guessing is going to be based a lot on, that pop with what could potentially take place, at the end of June. So, it's definitely intriguing, and this is a thing where regulatory will the regulation will do a lot here, or have a big effect one way or the other, and it's just difficult to figure out how to play it, But I mean, so many of these things, like what are we showing right now? Lean. So many of these look like they're just in solid downtrends, or have been. I mean, you see stuff turning around here, but it's been running down for so long. This is interesting here. This is your properties guy again. It's like when you get to like a double in point and figure where you have two like rows of X's that are lined up. If it goes up like one more, that's a strong buy signal. And I mean, this is, solid. You've got like, higher lows on RSI, which, kind of confirm the fact that you're seeing the same thing in actual price. So that's not terrible. But it is, after real major ugly drop, and you see that in a lot of them, but I mean, there's
Yeah.
still quite a few that just significant downtrend. I mean,
Yeah. I mean, the industry has been in a downtrend for quite some time. Um,
right. I
and,
mean,
and I don't think that's going to, we're waiting on what happens on June 29 before anybody really is going to know.
yeah,
You know what I
yeah,
mean? In other words, we can't predict the industry. We can predict what, based on the binomial distribution of outcomes in theory of June 29, we can predict
right,
where the industry will go. But there's a lot of stuff that's already priced in, already baked in, right, around
right.
capacity and build outs and things like that. The real question is, are the operators themselves going to suddenly have, more free cash flow and, better earnings and, or in theory, better, um, you know,
So I mean, what's your view on that? I mean, in terms of the professionalization of the operators. I mean, once you told me that when you were still actively doing this in Colorado, it's like a lot of your competition were, guys that had grown illegally and basically, were users of their product where you are not, and everything was pretty casual. But as those guys get kind of, as their inefficiency pushes them out of the market, or they get acquired by people that are, better operators, what's the level of professionalization? Because is it getting higher,
it's
or
increasing. It has already increased dramatically, and it is
okay,
continuing to increase. I mean, I would have argued a while ago that the industry pretty much didn't have any true intellectual property that was, patentable IP. I think that's changing. I think they're starting to get to the point where they can do that. The addition of research will change that too, right? They'll be able to get some of that. Um, the you know the growers of the past have largely been sort of pushed to the sidelines once they the people who had the money who were investing began to realize that they didn't actually know how to do this at scale. They knew how to do it in their basement, and
right?
so that changed the world a lot. I mean, I joked about the industry in the early days. It was a lot of smart money chasing a lot of dumb players, and that was really what was going on. I mean, you had private equity and family offices and people like that investing huge amounts of money um, on a kind of a I'd call a momentum basis. That
Yeah,
this industry was going to go to the moon and everybody was going to be buying cannabis, and we want to be one of the first ones in, so we got the position to we want to be Tesla, whatever. Um, and I was in the middle of it every day, and I'd get on a call with private equity guys and be like, I don't think you understand what's really happening here. I mean, we got a bunch of amateurs that are building these businesses, and interestingly, they're not even focused on profitability. They're spending your money and having a lot of fun doing it. They don't have a concept of profitability. They don't have a concept of accountability. And so, they're amazed that somebody gave them all this money and they're going to go build the thing they've always dreamed of building. I mean, I'm a woodworker. If somebody said to me, "Hey, here's $1 million, go build your wood shop," oh my God, I'd build the most amazing wood shop on the planet. But it probably wouldn't be commercially viable.
yeah,
It would just be for me to have fun. And so
right.
that was really the issue. But that has definitely changed. The publicly held players had to be commercially viable. And that's why they made the decision to pull out of states where, there was just no way they were going to make money. And that's also why, and they've started to standardize operations across states. They've started putting in ERP systems and acting like real companies. And so, I do think that the professionalism and the ability for them to be successful and to be profitable continues. But I also always play that against the background that is this is a commodity business.
Yeah,
And even people who've established brands, that some of the brands in this space that are pervasive across multiple states through licensing and things like that, those brands don't really have a lot more pricing power. They have some, but not a lot.
yeah.
And certainly not like Apple does, right? So,
No, no,
um,
definitely not.
and the number of substitutable products is really high.
Yeah.
And because of one of the other things about federal illegality, if you will, was the inability to really go get patents. You can't patent something that's illegal. And so it's really hard for people to get intellectual property in the first place that is distinctive and unique, and then it's impossible to protect it. Ideally, that changes here too. So, I mean, I think that the big established multi-state operators, the MSOs, will have the long-term advantage in that they'll be able to, bring that IP in. But the other big question in the back of my head is right now the DEA has made it very clear that if you're part of a state regimen, right, a state licensing regimen, they're gonna respect those rules, and that's what's going to be govern it. I've kind of had this movie playing in the back of my head all along. Back to the whole thing about we don't want federal legalization because we'll have a fist fight in the parking lot. If we got federal legalization, then how do you unwind all of these state and local taxes and regulations and all that kind of stuff, and basically unify this structure across the whole patch? And that is a massive effort, and it's also going to be one that's going to be contested by the states, and particularly the municipalities who are getting all this tax revenue.
Yeah.
So I think it probably evolves more like insurance, where we have an insurance commissioner in every state, and we have Allstate, we have State Farm, we have other that play in multiple states. But the reality is State Farm of Florida is a different entity than State Farm of California, if they're even still there. And so,
Right.
you're going to have that kind of a world evolving here, where these guys are really going to be trading the IP and the process and the brands. And then you're going to have local operators who, no different than a coffee shop that's competing with Starbucks.
Yeah.
And they will have some way to do that, something that makes them unique, ideally.
Yeah. 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 Intriguing. Totally intriguing. If 16-year-old me knew that I was going to be sitting here today having this conversation about marijuana being legalized with a good friend, and we would be recording it, I would have probably taken another hit off the bong and made some disparaging remark. But here we are.
And the irony is, 16-year-old me would never have taken a hit on a bong and still hasn't. And so, if you had told me at 16 that I was going to be in this business, making this product and selling it, I would have told you there's not a chance on the planet that's going to happen. And so, largely I ended up there because that's what investors asked me to go do, not because I had a passion for it, which is
Yeah.
what made me kind of a weird player in that space, right? Because I didn't come from the industry.
Right.
And the industry was interesting because it was underground, because it was illegal. Nobody knew how to scale, because scaling was a good ticket to going to jail.
Yeah.
And most people grew indoors because growing outdoors, again, was a great way to attract attention. Even though I can't think of another crop on the planet that's grown at scale indoors. And there's a good reason for that. Growing indoors is an unnatural act. You shouldn't be doing it. It is highly expensive, and it's a whole other discussion. And yeah, you can produce a product that's more refined or greater density or whatever. And some people absolutely prefer an indoor grown product, but the reality is just the cost of it is insane compared to the typical buyer value. I think the other thing is, being in the illegal space for so long, there's no accountability.
Yeah.
And I used to joke with people all the time. I'm like, oh, so let me ask you this: when's the last time you asked your dealer, where was this grown? What batch was it in? What lab tested it? Can I see the certificate of analysis and see the results of the testing? Now, you didn't use any illegal pesticides or anything non-organic when you were growing this, did you? And guy on the other side be like, dude, this came from a bale in Mexico. I have no idea the answer to any of your questions, and don't care. You want this or not? I'm
Right.
gonna go sell it to the next guy. So, and I once was pressed by a local politician, a municipal, city council kind of person, complaining about our industry and how the evils of the industry in general. And I said, well, let me ask you a question. What's your favorite drink? He's like, I like a really nice scotch. I'm like, okay, that's cool. So alcohol is a drug, and you're imbibing in that drug. And the difference is that you probably wouldn't buy alcohol from a guy on the street corner under his coat, would you? Um, no, why not? Well, one, it's illegal. Two, you don't know the quality of what you're getting.
Right.
Three, you don't know the safety of what you're getting, right? You don't know if this is
Right.
safe. Don't forget, during Prohibition, people died drinking ethyl alcohol. And so, what we are doing as an industry, what cannabis is doing as an industry, is the same thing the alcohol industry has done, which is we've taken a product that people want and we've made it safe. We've made it, accessible. We've made it more convenient. You don't have to find your dealer. you know, you can just go to a dispensary.
Right.
We've made it less expensive by far. And so generally, we have brought a product that people are buying anyway into a world where it costs less and has more value and is far safer.
Mm-hmm.
And that's what the industry's value proposition in my mind really is.
Absolutely. Absolutely. Well, uh, the 16-year-old me would be very happy to see that we are this far along towards legalization, because it always seemed like it was something that never should have been illegal in the first place, even though I no longer indulge. But anyway,
I'm
so
betting six. I'm betting 16-year-old you wasn't probably considering political issues and things like that, right? So, yeah, there's been a lot
uh
that's gone into this.
yeah, 16-year-old me, would hair down to here and sporting the pirate earring and going to see punk bands, sneaking into bars, underage,
There
sneaking
you
into
go.
bars so I could see punk bands and things like
There you
that.
go.
That
I
was,
love it.
yeah, 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 yeah. It was a good time. Good time.
Cool.
All right, we have talked for quite a while on this, and there's a lot here to unpack. I hope everybody watching has enjoyed it. I hope you've learned a couple of things. Please like and subscribe, and let us know what you want us to talk about, because we love going down these rabbit holes. There's just, you know, there's a lot of absurd things in this world for us to cover. So, please let us know what you want to know more about.
Publicly held drug dealers. That sort of meets the standard of trading the absurd. There you go.
There we are. There we
Cool.
are. All righty.
Always fun, Greg. Talk to you soon.
Okay, absolutely. We will see y'all on the next one. Okay.